So trading just 1 hour a day during the learning session can be a powerful strategy for maximizing efficiency and profit. The learning session is known for its high volatility and liquidity, making it ideal for capturing significant market movement in a short amount of time. By focusing your trading efforts within this peak period, you can take advantage of the best setups, maximize screen time, and achieve consistent results, all while maintaining a balanced lifestyle, whether you are a beginner or an experienced trader. Dedicating just 1 hour during the learning session could be the key to your trading success. So for us to make a very good use of trading the learning session for just an hour, there are 4 major keys that we need to actually take care of. The first key is timing. Timing is crucial. The landing key zone typically spans from 2 a.m. to 5 a.m. Eastern Time, a period when the London market overlaps with the later part of the Asian session. This window is critical because it often sets the tone for the day's price action. Focus your trading efforts within this time frame to catch the initial volatility and potential reversals that occur as liquidity flows into the market. And the point 2, look for liquidity sweeps. So during the London kill zone, the market often hunts for liquidity by sweeping previous highs or lows before making a decisive move. Watch for these liquidity grabs as they can indicate the start of a significant trend or reversal. Identifying these sweeps can provide you with optimal entry points, especially when combined with other confirmation tools like fair value gaps, order blocks, breaker blocks, and mitigation blocks. So the third point that we are going to use is we use optimal trade entry. That's the OTE. The landing key zone is an ideal time to apply the optimal trade entry. That's the OTE technique, which involves entering a trade on a retracement after a significant move. Measure the Fibonacci retracement levels from the high to the low of the previous price swing and look for entries around the 62% to 79% retracement zone. This method helps you align with the dominant market direction, maximizing risk. So all we need is 1 hour trading period. We only need 1 hour during the learning session to make a massive profit of 5 to 10% just trading for 1 hour during the learning session. So just grab your notes and your pen and sit tight. Let me walk you through this very strategy. Hey guys, so in today's video, we are going to make use of these 3 major instruments. That's the session volume profile, price action, and the landing kill zone. After that, then we need to mark our OTE, that's the optimum trade entry. That's going to be our fair value gaps, our order blocks, and our breaker blocks. So what's the volume? So volume profile tells you how much volume occurred at a specific price level. This is key because traditional volume tools tells you how much volume was traded throughout an entire day, which isn't as useful. These bars here shows you how much low volume was traded at each price level. So you have this low volume here and also low volume here. This tells us that we had a very small or low volume traded in the market at this price level. And these bars here shows you how much high volume was traded at each price level. So you can see here we have a lot of volume being traded at this price level. At the same time, a lot of volume being traded at this price level, and we also have a lot of volume being traded at this price level. So when we take a deep dive into this, we could clearly see that wherever we have high trading volume, that's where we see a lot of activities happening around that price level. So you can see from here, this is a high trading volume, a lot of activities happen here. You could see from here, high trading volume, a lot of activities happen right here. And we have here high trading volume, a lot of activities also happen right here. And when we take a look at the low trading volume, you can see from here, this is a low trading volume. And what do we have here? There was no amount of transaction happening here. So you could see most low trading volumes are served as what? Fair value gaps and lower lows and highs. So you could see from here too, we had a low trading volume here. And if you watch left, you could see there was a strong fair value gap here, which means there was not enough volume being traded at this price level. This red line here is the point of control. This is what we call the point of control, which is the level where the most trading volume occurred. So if you watch this red line here, you can see that this is where a lot of trading volume occurred. So when price pulls back to this level like this could be used as a form of what? Supply zone, or as a form of resistance to push price what? Much lower. So why is high trading volume important? Firstly, the higher the trading volume was at the level means the level was somehow or somewhere buyers and sellers had a lot of interest in and took big actions at the level through buying and selling at the level. Second point, this means if price comes back to these levels again in the future, buyers and sellers might have interest again in the level and take action, which present trade entry and exit opportunities. Like any other indicator, you need to combine it with price action method such as key levels. The third thing we are going to take note of is the landing kill zone indicator. So the landing kill zone indicator helps us to identify what our Asian high and lows. So with this landing kill zone indicator, we could identify here to be what our Asian high here and what our Asian low. So this was the price movement during the Asian session. So what we are going to do is we want price to sweep either side of this Asian high or low liquidity. Then we take an entry to an opposing what liquidity. So what we are going to do is we are going to wait until price takes liquidity above any of these highs. Then we target price to the opposing liquidity. Or when price takes liquidity below this low, then we take what? An entry to an opposing liquidity. That's where we are going to apply the internal range liquidity, which are the fair value gaps, to an external range liquidity, which is structure highs and structure lows. So just like what happened here, we saw price took liquidity above this Asian high here. And then when we go down to the smaller time frame, we could find what? A reasonable entry inside this particular level here. So let's see how price reacted to this level here. So on the smaller time frame, price did give what? A market structure shift here. Then after that, price came all the way back into this other block. And if we are taking our entry from here, price would have given us what? More than 1:5 risk to reward. So we pick our entry from here, then we target this structure lows here. So this would have given us what? More than 1:5 risk to reward. So this is the same strategy we are going to use in this particular video. So jump right with me, let's dive into the video. So as I said earlier on, The only thing we need is 1 hour during the landing session. We only want to trade 1 hour period during the landing session. So what we are going to do is to first plug our session volume profile. So session volume profile, I already have my session volume profile here, so I will just make it visible. So here you see my session volume profile placed on the chart right now. So as you can see, we have where a lot of volume was traded, the red line here being our point of control, and that is where we are going to be picking what our entry from. So the second thing we are going to do is to identify our market structure. So based on price action, we could see price is in a strong uptrend after price kept breaking series of higher highs and higher lows to the upside. So we could see price break this high here, break this high here, and this is our swing low here, and this is basically our swing high. So what we are waiting to do is we identify our swing levels. Basically, this is our swing low here, and this here is our swing high. So since we are in an uptrend, we want to take price from these lows here and target this structure highs here as our take profit. So this is we on the higher time frame. So this is we on the 30-minute time frame. So what we are going to do is we are now coming to identify structure. So as price broke above this particular high here, went all the way up, we know price will be coming down here before we pick another entry. So here we see price coming down, showing series of higher highs. So here we see price coming down, show a series of lower lows and lower highs until price came all the way down, swept liquidity below this low, pushed all the way up and broke above these highs. So let me do the markings for us to see. Let me first turn off our session profile volume and our landing kill zone so that we would have a naked chart. So this right here, what we are going to do is we are going to identify our structure level. So here we see price came all the way down here, broke below this low and took liquidity here. But looking at this chart right now, you can see price came down here, pushed all the way up and came all the way down. So this is basically our last high, which caused the break of this structure to the downside. So you are going to identify here as our structure high here, which price then gave us a change of character. So here is change of character or a market structure shift. So we have here to be our market structure shift. So we have here to be our change of character here, and price actually broke this last low here to the downside. So here price grabbed liquidity here. So after we have this confluence being placed, what we need to do is to identify our point of control, or where there was a lot of volume being traded in the market. So here we plot our session volume profile, then we have our levels here. So how we are going to use this session volume profile is this session volume profile calculates how much volume was traded during the previous day. You understand? So here, how much volume was traded during the previous day. So here we need to identify our point of control. So here our point of control is basically this level here. This is actually our point of control. This is actually our point of control here before this new session opened. So the reason why we did not make use of this point of control here is this is a new session or a new trading day. So this point of control might be changing as price keeps moving to the upside. But this one right here was the point of control during the previous session or the previous trading day. So this is going to be stagnant here and it will not move. So this is actually going to remain here until price actually gives a new trading session. So what we are going to do is, this is basically our point of control where we are actually expecting price to come all the way down into to give us an optimum trade entry. So we mark this level here to be our point of control, and we are expecting price to actually come all the way down here to give us an entry. So right now that we have our session volume profile being placed, we have our point of control here. What we are waiting for is for price to come all the way down into an entry. So here we could see price came up here and also broke above this structure highs here. So what we are going to do is we are going to identify here as our break of market structure. So right now let's plug in our landing kill zone. So right now we have our landing kill zone here, and we are actually targeting this very highs here. So what do? We expect price to come all the way down here to sweep liquidity below this landing low, tap into our previous day point of control, then give us an entry confirmation on the smaller time frame. Then we target this trade all the way to the upside. You only need 1 hour to make you only need 1 hour to make 5 to 10% profit just trading for an hour. So right now we've identified our price action, our market structure. So what we are waiting for to see how price reacts towards this level. So here we see price actually coming down. Price finally sweep liquidity below the landing low. But what do? We do not take our entry. We want price to come all the way down, tapping into our previous day point of control. This is where we have our session volume profile. We want price to come into our previous day point of control to give us trade confirmations that price is actually coming to push higher before we take any entry. So now that price has actually tapped into our point of interest here, we are going to switch to the smaller time frame. Basically, I use the 5-minute time frame for my entry confirmations. So on the 5-minute time frame, this is what we are looking at. Price has actually tapped into our previous day point of control, which is basically here. And if we look clearly here, we could also see our optimum trade entry here, our fair value gaps on the 5-minute time frame also here. So we are actually combining multi time frame confirmations to actually pick the entry from this particular level here. So we have 5-minute time frame here. Price has also mitigated this 5-minute fair value gap here. So let's see how price reacts to this level. So here we see price actually going down below our optimal trade entry, also giving us another confluence. So right now we need to identify where liquidity was currently taken, which is basically here. This is where liquidity was currently taking, basically this low here. And what we are waiting for is for price to actually give us a market structure shift. For price to give us a market structure shift. Then we pick our entry based on our good. So here we had our market structure shift here, because when you go to the 3-minute time frame, you can see price actually came all the way up here. So here we have our market structure shift. Here we basically have our market structure shift here. That's our second confirmation on our smaller time frame. So we have a market structure shift here. So what do? Let's plug in our Fibonacci 2 from this swing low here to this swing high, and actually also identify our smaller time frame fair value gaps, which is basically here. Then we actually pick our entry from this fair value gap. We put our stop loss right below here. Then our take profit, our first take profit, we are basically going to target this Asian high here, which is going to give us more than 1:3 risk to reward. But then if price decides to go more higher, then we will extend our take profit. So let's see how price moves from here. So here price actually tapped us in, and we see price actually pushing to the upside. So let's switch to a 30-minute time frame to see how far price can actually travel from here. So in the 30-minute time frame, we have our first take profit to be this Asian high here, which is more than 1:3 risk to reward. So if you are risking 2% on this particular trade, you're actually going to make over 6% or 7% on this particular trade. That's just our take profit one. And our take profit 2 is going to give us what? More than 1:7 or 1:8 risk to reward. So let's see how price moves from here. Now here we see price actually spiking through our take profit 1. And what do? Since price has come into our internal range liquidity, we are basically targeting this external range liquidity, which is going to give us what? 1:14 risk to reward. So if you risk 1% on this trade, we are going to make over 15% on this particular trade. And if you risk 2% on this trade, we are going to make over about 30% on this particular trade. So since our first take profit is hit, let's see how price react to our next level. So here we see price coming all the way up here, and boom, price finally tapped into our external range liquidity. So this is basically how you are going to use this same entry, this same strategy to be picking your entry every single morning. All you need is just 1 hour in the forex market, just 1 hour to hit your take profit 1. Just 1 hour to hit the table. So when you go back to the 5-minute time frame, we could clearly see so when you go back to the 5-minute time frame, we could clearly see that price took around just about price only pushed from this low here to this high here within an hour. Just within an hour, you hit your first take profit, which is about 1:4 risk reward. So even if you risk, so this was basically another trade example on gold. This is another trade example on gold, which basically what happened here was, we could clearly see from price action perspective, price was in an uptrend. Price was in an uptrend because price broke above this level here, and we had what? An immediate market structure shift. So at this very point, if you were actually buying gold, the moment you saw this pattern right here, you need to see that right now our bias on gold has changed from being in an uptrend towards a downtrend. How do we find our entry? We need to plot in our session volume profile. When I have our session volume profile plot here, and what do? We focus much on the previous session or the previous trading day. This is what we actually focus on so that we can capitalize our entry on this current trading day. So what we are going to do is we go to the previous trading day, then we identify where there was a lot of volume being traded, and we could clearly see that this was where we had a lot of volume being traded. But then the most important zone that we need to take note of is our point of control. That's basically this red line here on our volume profile. So this is the point of control. So we mark this level here as what? Our point of control. So this is the zone that we are actually expecting price to push in before we take what? Any other entry. So what do? We now switch all the way down to what? Our landing kill zone. So what we are doing here is, we've already seen price is in a downtrend and we want to take our entry. So right now we've plot our point of control on our previous day session, which is right here, and right now we also have what? Our landing kill zone here. So basically, if price is actually targeting an internal range liquidity, price will tap into an internal range liquidity, and we target the opposing liquidity, which is the external range liquidity sitting right below here. So what we are going to do is, we are going to see price sweep above this landing high here and give us what? An entry confirmation to start selling all the way to the downside. So let's see what happens next, guys. So here price finally swept liquidity above the landing high. Landing high here. So right now we have our second confirmation what? Being met. So what do? Now we scale down to the smaller time frame, which basically I always use the 5-minute time frame to actually find what? My entries. So price has actually supervised the landing high here. So let's see if we would get any other confirmation. Price basically tapped deep into our point of interest, and here we see price giving us what, this sort of confirmation here. Price tapped in. Right now we have this fair value gap here. So let's see how price reacts around this particular level here. This is a fair value gap, but when we look to the left, you could see that this is a clear inversion fair value gap. So let's see what happens next. So price actually did tap into our inversion fair value gap. So this is where I am going to take my entry, inside this inversion fair value gap. I'll keep my stop loss just right above here, then target this landing low here. So basically this is where my entry is actually going to be. So my take profit 1 is this landing low here, and my take profit 2 is basically this external range liquidity here. So this trade is actually going to give you over 6 RR on this particular setup. So if you raise 1% on this trade, we are making about 7% of this trade, and if you raise 2%, we are making way over 12% on this particular trade. So let's see how price plays. So here we see price play around our point of interest, and now we see price actually pushing to the downside. Let's see if price will hit our first take profit. So here price actually finally hit what, our first take profit. Our first take profit hit this landing low here. So let's see if price will actually push much lower. So here price finally came all the way down here to hit what, our second take profit. I think it's going to be just few pips. So here price finally hit what, our second take profit. So this is basically the simple approach on how you can just spend only 1 hour during the landing session to always pick your entry using the session volume profile. Then after that, we look at price action, how market is actually either trending to the upside or trending to the downside. Then we use the landing session to also identify where liquidity is going to be taken. Then we target what, the opposing liquidity. Then we can pick our entry from our OTE, our optimum trade entry, from our fair value gaps, our order blocks, and our breaker blocks. So guys, if you love this video and want to see more content like this, kindly hit the subscribe button, turn on the notification bell, and gives me a thumbs up so that you will get notified whenever I drop any more content like this. Peace out.